Another decision companies should make is a decision to make or buy. So, suppose you are making some product at a cost of 30 per unit, and there is another supplier who offer you to provide that product in $20. So what should you do? Should you just consider this cost 30 and 20, then see that the supplier is providing you product uh, in $20, you can save $10 per product, or you should see the other cost, because you have to keep in mind that there are some fixed costs included in this 30 per unit which you cannot avoid. So these are unavoidable. So even if you stop making your product, you cannot eliminate all of these 30. Maybe there are $15 which you can eliminate, and there are $15 which you cannot eliminate. So you will incur these costs plus this cost. So in total, this will make 35, which is higher than 30. So your decision to buy will create losses for you. So like any other decision, like we have studied before, we have to think about the relevant cost. So which costs are relevant? Relevant costs are those costs which you can avoid. So for example, if you make a product, you have to use some direct material, direct labor, and variable overhead. So if you decide to not make the product, you can avoid all of these costs because these are the direct costs. So these are the relevant costs. Another definition of relevant cost is that the cost which change between the different options. Maybe they are increasing or they are decreasing. We can also call them differential cost. So these are also the relevant cost. So for example, we have some factory overhead. Maybe this will decrease if you decide to buy the product from the seller. So this saving, this differential cost is also a relevant cost because you can avoid it. So any cost which you can avoid, any cost which increase, any cost which decrease, these are all relevant cost. And on the other side, what is the irrelevant cost? which remains same. So you make a product or buy a product, you still have to pay that cost. So you don't have to consider that cost in the decision making. Decision rule is simple like before. So if you are having some savings, you should choose that option. You should not choose that option which is increasing your cost. Simple. Let's look at this example. So Essex manufactures part 4A that is used in one of its products. The unit product cost of this part is, so there is some direct material, there is some direct labor and variable overhead. So these are all direct cost. Then there is some depreciation of special equipment. These three are all relevant. Why? Because if you will make the product, you have to bear all of these costs. If you will not make the product and decide to buy it from the supplier, then you can save, you can avoid these costs. So because these costs differs between two options, that's why these are relevant costs and they should be included in calculation of the decision making. What about the depreciation of special equipment? So there is special equipment which you are using to make this product. So there are different options you can have about the special equipment. One is you can sell it. So if you can sell it, you will get some money. So this is a revenue and should be included in the calculation of the decision making, because you are getting something which you are not getting now. So if you choose to buy from the supplier, then you can get some money by selling the equipment. That's the one option. Second option can be you can use this equipment for some other production. So you can make some other product using this equipment. That's also a benefit to your company which you are not getting now. So in that case, this is relevant. Another option can be nothing. This is some special equipment which cannot be used for any other product. This has no resale value, nobody is willing to buy that product, so you cannot sell it, you cannot get anything out of it. So in that case, because you are not getting money by selling it, you are not able to use it in any other product, so you are not getting anything. So if you are not getting anything, then this becomes irrelevant. This becomes your sunk cost. So we know that sunk cost has been incurred in the past and is not relevant for the decision making now and for the future. So we will just ignore the depreciation if the product is not usable, is not resaleable. What about the supervisor's salary? So there is a supervisor who is looking after the production of the product. So if we are not making the product, we don't need a supervisor. We can fire him and save some money because we are saving some money. So That's why it is relevant cost. General factory overhead. So this is the general cost of the factory, like rent of the factory. So in the factory there are different production facilities, there are different departments. This is a fixed cost. All of them are sharing this cost. So if we shut down one product, we still have to pay that kind of the cost. So this is unavoidable cost. So should not be included in the decision making, right? So these are all the costs. Then we have to make a decision whether we should continue producing that product or buy it from an outside supplier. So here is some more information. The special equipment used to manufacture part 4A has no resale value. So you cannot sell the equipment or other use. You cannot use it in some other project. So the machinery cost is sunk cost. You cannot charge its depreciation as well, because the cost of this machinery and its depreciation is not relevant for the decision making anymore. The total amount of general factory overhead which is allocated on the basis of direct labor hours would be unaffected by this decision. So this general factory overhead will be unaffected. So we know that whatever is not affecting is not relevant. We have to include only the relevant cost, which changes between the options. The $30 per unit product cost is based on 20,000 parts produced each year. An outside supplier has offered to provide the 20,000 parts at a cost of 25. So you are incurring a cost of $30 to produce one unit of a product, and outside supplier has offered to provide it in 25. So by just looking at it, you may be tempted to choose the option to buy it from an outside supplier, but we have to think about the fixed cost. What are the relevant costs? Which cost we can avoid? Which cost change if we make the decision to buy? So let's evaluate these options. So from outsider we can purchase the product in $25. So we are making 20,000 products, so total cost we will be paying to outside supplier is 500,000. And what cost we will incur if we keep making the product? So direct material cost is 9 per unit. We have to make 20,000, 180,000. Then direct labor hour similarly for one product 5, for 20,000 products 100,000. Variable overhead for one product 1, and for 20,000 3. We cannot include the depreciation because it's a sunk cost. Supervisor salary we can save 40,000, and we cannot include the general factory overhead. It's a fixed cost we make in the factory, or we buy from outside, we still have to pay that cost. So if we decide to buy from outsider, we have to pay 50,000 to outsiders, but we can save only 340,000. So by evaluating these options, we can see that if we decided to buy from outsider, we have to pay 160,000 more money, which is a higher cost. If we continue to produce, uh, we don't have to pay that much money. We can save that money. So the decision is keep making that product, because buying from outsider is expensive.